We spend a lot of time talking about how organizations build heavy digital firewalls to fight off threats like ransomware and secure their networks. But once you've successfully locked down that digital perimeter, a very practical problem remains. The business still has to figure out what to actually do with all the information trapped inside. Every second of every day, a modern business generates a continuous stream of data. Customer interactions, human resources updates, physical supply chain logistics. It is a massive volume of numbers far too complex to be managed on a basic spreadsheet. To survive this data flow, managers have to climb the corporate tech ladder. At every rung, they rely on highly specialized software applications tailored specifically to their rank and department. Building a secure digital fortress is meaningless if a business lacks the software tools to process the data it protects. The ground floor of any business operation is the frontline exchange. For most history, processing a sale meant physical bartering or tracking inventory entirely by hand. Eventually, businesses moved to mechanical tracking, recording a sale by punching the heavy physical buttons of a brass cash register. Today, that mechanical till is a transaction processing system, or TPS. Picture a barista at a local coffee shop handling a rapid-fire line of morning orders in a high-volume digital environment. When you buy that coffee with Apple Pay, the TPS routes the data through a merchant aggregator, like Square, validating the secure mobile payment with your bank in seconds. Beyond clearing the payment, the TPS acts as the essential intake valve, capturing the raw baseline data that feeds every other software system in the company. Moving one step up the ladder brings us to the departmental coordinators. Here, that raw transaction data is sorted to track both human behaviors and physical goods. Let's say you run a mid-sized business manufacturing custom rugs. Keeping track of hundreds of specific client preferences manually is impossible. That requires customer relationship management, or CRM software. The CRM automatically tags purchasing habits as they happen. So when it's time to launch a new line of premium mats, your sales team knows exactly which previous buyers to target. Tracking physical inventory requires a different approach. Supply chain management software tracks logistics. Here's a network model showing a hotel managing a standard baseline flow of beverage inventory from its suppliers. If 500 sports fans are suddenly booked, the software calculates that massive demand shock, instantly triggering increased deliveries, avoiding wild overordering down the line, the Bullwhip effect. Together, CRM and SCM act as the organization's nervous system. They take unpredictable customer demands and translate them directly into coordinated physical supply. Once the daily logistics are humming, middle management enters the picture. At this rung of the ladder, the objective shifts from tracking current reality to predicting future outcomes. To pull that off, managers use Decision Support System software. It's an analytics tool explicitly designed to solve complex problems in rapidly changing environments. If a marketing manager wants to know whether doubling their social media advertising budget will actually yield a profitable return on investment, they can test it digitally before spending a dime. The DSS pulls in historical sales data and ad costs to run a predictive cost-benefit analysis. This chart forecasts two distinct revenue trajectories, plotting exactly how the proposed budget increase compares to the expected boost in sales. DSS software takes the guesswork out of the equation. It elevates a manager's role from relying on gut instinct to executing a rigorous, evidence-based strategy. Finally, we reach the C-suite. In a rapidly growing business, like an international auto parts distributor, leaving human resources, finance, and inventory locked in disconnected, siloed software creates dangerous blind spots for leadership. Enterprise Resource Planning Software, or ERP, consolidates these isolated functions into a single cohesive database that all departments share. To make sense of that unified data, a CEO uses an executive information system. This is an intuitive dashboard interface built strictly to monitor the entire ERP network from the top down. When she opens her EIS dashboard, a flashing red indicator highlights a sudden drop in Q3 revenue. Instead of weeks of meetings, she drills down. The software pulls up a submenu of regional performance, isolating a logistical failure at a specific Midwest facility. The data points directly to a physical reality. A major construction delay has completely halted production at a key supplier. By connecting every department, enterprise software bridges the gap between a physical stall on the ground and the strategic adjustments needed at the top. Today, artificial intelligence acts as an invisible layer that automates analysis at every level of the organization, from detecting behavioral anomalies in security logs to predicting global supply trends for executives. A quality product or a skilled team remains essential, but these software layers ensure the data generated by that work actually reaches the people making the decisions. Think about a business you visit every day. What do you think is their weakest software link, and how would upgrading it change their daily operations? Let us know in the comments below.